Welcome back. John Cairns, currency strategist at Rand Merchant Bank, our guest in the studio this evening. We're talking Forex trading. The BRICS, now the Brazil, Russia, India, China, South Africa. Trade Minister Rob Davies, I've got a press release here, saying that the BRIC nations could benefit considerably by trading directly in their own countries, cutting out unstable internationally convertible currencies. Could that be a reality, that you get a section of the world just trading in their own countries?
Well, okay, so again, we take a step back. Let's say you and I, you've got Thai baht, I've got South African rand, and we want to transact. How it practically happens is you use your Thai baht to buy dollars, and then from dollars into rand. So you're going through two transactions essentially. So if you can miss out the middle currency, you can save on transaction costs, make it more liquid, etc. But 73% of global Forex trade is still against the dollar. It shows you just how important the dollar's role is. So in the really major currencies, you can do sterling euro directly or euro yen directly. But in the more minor currencies, even though South Africa is the 17th most traded currency in the world, really the majority of trade is still rands directly against dollars. You can do some of the other currencies, but really for practical purposes, it's going via dollar to the other currency. So if you could cut that out, yeah, you're going to cut your spread this amount. It's a pretty small thing, and really to think that there's going to be direct flows Brazil rand, I mean, it's a very small trading market. I mean, it's just no way. It doesn't make sense for the banks to go and quote directly in those currencies.
And I suppose realistically, the biggest, I would imagine the biggest partner in that whole BRIC region is China. And they are dealing so much with the US that to start quoting their currency against ours would be pointless.
No, well, in fact, that's the one exception of the BRICS where it could actually make sense to deal directly.
Oh, really?
China's had a funny system. It's because of very harsh exchange controls. The ability to deal in Chinese yuan has been extremely limited. So when a South African entity, person or company has dealt with China, you've dealt into dollars and you've handed the dollars across to your Chinese counterpart who transacted into Chinese yuan through one of their local banks. But recently you've had a development, it becomes quite technical, of what we call an offshore deliverable market in Hong Kong. So don't worry about the technicalities, but the bottom line is companies anyway, not individuals yet, can start now to quote in Chinese yuan. So if you're a big company, a ShopRite, a Pep, etc., you're buying the majority of your goods from China, you can actually sign invoices in Chinese yuan with your Chinese counterpart. So it reduces your Chinese supplier's currency risk because he's now not getting dollars, he's getting Chinese yuan. And RMB, Rand Merchant Bank, we're giving those tools now to corporates to be able to invoice and settle directly in Chinese yuan. Why is it an exception? Just because China is such a large economy. Its importance is growing. It's one of our major trading partners now. It's going to continue to grow as our trading partner. So in some sense, it's sensible that South Africans can settle in yuan directly, but to settle in Brazilian real or Russian ruble, yeah, I think that's definitely a step too far. Go via the dollar for those transactions.
Right, let's get to the most important currency then, the dollar. What's happening there?
Yeah, the dollar is very weak at the moment, and rightly so. Quantitative easing, in other
Freudian slip there. Yeah. Rightly slow. Because that's what's happening. Yeah, everything's happening slowly.
Yeah, well, yeah. The slow U.S. economy, still problems in the housing sector. The Fed doing quantitative easing, by which we mean printing money. Okay, the U.S. politicians can't resolve the country's budget problems. So all the factors generating a very weak dollar. Some forecasters out there going ahead and questioning the dollar's role as a reserve currency. Personally, I think that is quite safe for the moment. US economy is still the dominant one in the world with its sophisticated financial markets, but the dollar is very weak, and there's no reason to think it can't get weaker still, given what the Fed and the politicians are doing.
Are they still printing money?
Well, until the end of June, they'll be printing money, and then they will have to decide, are they going to go through another round of printing money, or they're going to start unwinding it. Given decent growth out of the US, the expectation is they're going to stop printing money and just let some of those programs expire naturally. So they're not going to go and take all the money back rapidly. But essentially we're getting to the end of that monetary printing era. Quite an important mark for financial markets.
But you see, the last time we heard of people printing money, it was just north of us in Harare, where I told Mr. Blair and I told Mr. Bush, we will print money. And they printed themselves into a hole.
Yeah, well, we're talking completely different scale of things.
But I just get scared when I hear printing money.
Printing money, indeed, yeah. Yeah, no, that has been the worry for the US dollar. But the money printing that the Fed has done is only, let's say, 15 to 20% of GDP. It's $2 trillion. $2 trillion, which highlights just how big the US economy is, doesn't it?
You guys live in a different world to the rest of us. It's only 15% of GDP. Look, it's $2 trillion.
Trillion dollars, yes. Jeez. Yeah, and that, by the way, is not even what global currency markets trade every day. Global currency markets trade closer to $3 trillion US every single day. So just to put that in perspective. But come back to the main point. The monetary printing by the Fed is not enough. It's not nearly on the scale of Zimbabwe. It's nothing similar to that whatsoever.
Yesterday, okay. Every now and again, we do a show and my head starts hurting. And this is one of those shows because the numbers here are just, they're insane. How do you guys, what do you do when you go to bed? Do you lie in bed worrying? Because I would.
No, it's not my $2 trillion position, unfortunately. Otherwise, I'd close it out, put it in my bank account. But this is what Bernanke's got to worry about every day. So, yeah, I mean, these guys, imagine having to be the Fed chairman or the ECB president during the financial crisis. Huge responsibility. They had to make the choice. How much money do you print? Is that going to be inflationary? Does that revive the economy? Is the economy going to collapse? They had a huge responsibility on their shoulders. And you've got to be said, they did a very good job. They brought the world back from the brink. So all credit to them.
How's South Africa's rand doing?
South Africa's rand is very strong at the moment. It's pretty much near record levels of strength in terms of movements from fair value. Because just remember, we run high inflation in South Africa, so our fair value tends to decline over time. So, need more rands over time to buy the dollar because we're running high inflation, don't have the productivity to match the money printing that we are doing in South Africa. The rand is at record levels of overvaluation at the moment. Doesn't mean it's going to have to weaken anytime soon, but in the longer term, the rand is going to have to weaken. And we need that from a South African economic perspective, reorientate our economy away from just this consumption and building of the malls, get our exports going, get our investment going, that type of thing. So that's a longer term scope.
But now you say the rand's got to weaken.
Mm-hmm.
I still don't quite understand the concept of how you weaken a currency.
You don't. The market will do it for you. You can't. Well, you certainly can't do anything. But even the Reserve Bank, even the Reserve Bank probably is pretty powerless to do something against the market. But what does a strong rand mean? We're going to start importing more and more goods. Our trade account's going to deteriorate. There's going to be shortage of foreign exchange. Okay, when investors get tired of pumping money into emerging markets, the supply of dollars will weaken and the rand will naturally come off. It's a cyclical phenomenon.
So this is a cycle?
Yes, it's a cycle.
We're part of a cycle?
Yes, and the cycle that we're part of is a global economic cycle. When the global economy is strong, the rand is strong. When the global economy is weak, the rand is weak. That's just our natural cycle because of what drives the rand: commodity prices, investor risk appetite, putting money into South Africa. Which, sorry, Jeremy, that's a good thing for exporters. You must remember, because when your demand is strong, then your currency is against you, and vice versa. So it gives you a little bit of a hedge at least. Importers have the tougher time. When South Africa's economy slows dramatically, interest rates are high, and the currency is weak. Much more difficult environment for an importer to manage their businesses because of the exchange rate than it is for the exporters.
Okay, so let me try and then wrap this whole thing up in my my little universe, which doesn't have $2 trillion in it, okay? So America at the moment, there's not a heck of a lot happening there. You're wanting the American consumer to start consuming more so that the Chinese start manufacturing more, and well, how the heck does that affect the rand? No, you see, I don't know. No.
Okay.
You see, I'm lost.
Okay, there's lots of points there. From an economic perspective, basic economics, supply must equal demand. And what we have in the world at the moment is a shortage of demand.
Okay.
Okay, not shortage of supply capacity, shortage of demand. Why do we have a shortage of demand? It's because for 15 years, the US consumer went out and remortgaged his home, went out and bought goods imported from China and the rest of the world. Okay, that system cannot go on indefinitely. Okay, the US can't just keep borrowing money and keep spending. What you need is other sources of demand coming through. So you need particularly Chinese, Japanese, and the Germans to start spending, not just producing, but also to start spending. It's the demand side of the economy this week. You need those consumers to come through.
How, in these cycles, how long do you reckon it's going to take for that demand to be back in the marketplace?
But we do have demand at the moment, but it's artificial demand. It's demand from the Fed, the printing of the money. It's demand from the government running budget deficits. That's a problem. The global economy is actually doing fairly well.
Is it?
But yeah, it's growing 4.5%, not at the 5% rates that we saw before the crisis, but 4.5% global growth is pretty good. It might not feel like it yet because we've come off such a low dip. Okay, so we're still recovering to some extent the ground we lost during the crisis. So it's not feeling like a boom, although in East Asia it certainly is boom times once again. The global economy is not doing badly. The problem is it's not doing badly, but it's on life support. It's not a self-sustaining economic system. For that, you need consumers to start coming through spending again, and the Fed and the Treasury and everyone else injecting money to withdraw themselves from the system.
Very briefly, when are we going to get off life support?
The money printing in the Fed ends in June, and then hopefully in a year or so the US can start normalizing policy. But it's going to be 2-3 years before the US, which has been the main one supporting the global economy, is back to normal conditions.